This is Robert Sin, and this is my presentation for the 121 Mining Conference in Las Vegas, March 2023. Pivot to Global Energy Transition, focusing on copper and lithium as two critical minerals for the energy transition. Many of you know me on Twitter as CEO Technician or CEO.ca as Goldfinger. It's interesting. I'm doing a presentation on so-called battery metals, but it's a sign of the times, and it's really about what's coming and why these metals and this energy transition is so important and especially critical to the mining sector. I've spent a lot of time focusing on battery metals in the last couple of years. As usual, forward-looking statements. If I discuss some mining companies, I may own a couple of them. I may sell them, buy more in the future. Please do your own due diligence. It's your money and your responsibility. And I will be making some forward-looking statements in this presentation. So, number one, the world has decided that it's time to transition from fossil fuels to renewable forms of energy, so-called green energy. So either in the form of electric vehicles or solar energy or wind. There's many forms, and they all require a lot of metals. Very few people really understand the structural constraints of this transition. And those constraints have a lot to do with mining, the production of battery metals, such as copper, such as nickel, such as lithium, are critical and the dominant constraint on the speed and scale of this pivot to green energy. For example, an electric vehicle requires 400% more metals and minerals than ICE vehicles that use obviously diesel fuel or gasoline. The US government has drained its reserves of crude oil in the last year and a half, and that's a tangible sign of the commitment to the energy transition. The US is sort of burning the boats. We're going all in, as are many other countries across the globe. Um, Human progress will continue, despite the risks and challenges the world faces. I mean, you just have to look at the news headlines in the last few weeks to understand the risks that are out there, the challenges the world faces. It could be war, banking crisis, inflation. But I think it's important to have a long-term vision and bet on progress. And copper is a critical component of human progress. So while I will discuss, lithium a little bit, the main focus of this presentation is copper. And finally, we are entering the capex stage of the cycle in which commodities should constitute an essential part of an investor's portfolio. So here's just a simple chart of the SPR, lowest level since August of 83. We've drained it pretty rapidly since Biden took office. And obviously, Biden is very much committed to the green energy transition. In fact, he was just in Canada last week, being friendly to our northern neighbors, because one of the reasons is because Canada has such an abundance of metals and resources. So Canada has a lot of the copper, the nickel, and lithium, as well as many other metals that the U.S. will need over the next couple of decades. And here's just one news item I pulled out from the last few months. New energy transmission line from Southern California to Central Arizona, 125 miles. Well, it's going to need a lot of copper, a lot. And this is just one example of many, literally dozens of programs, projects that will happen across North America in the next few years to upgrade and bring more energy. We need to upgrade. We need to update our grid. The US energy grid in many areas of the country is 50, 60, 70, even 80 years old. Dire need of a huge upgrade and refurbishment. And the US is just one country out of uh, many across the globe that will need similar. Uh, so, sort of making this presentation a little more timely is the current weekly chart setup in copper. So obviously, we know that copper had a big run during the pandemic, 2020 and 2021. It put in a major peak shortly after Russia invaded Ukraine in March of 2022, but then it had a big drop off as multiple headwinds hit the markets and metals, obviously tin and nickel, copper, all got hit around the middle of 2022 as suddenly inflation became a big problem and the Fed really started to tighten. They really started to put the screws to financial markets with the most aggressive rate hike cycle in more than 40 years, right? But something happened around the summer of 2022. Copper stopped going down and slowly started to make its way higher. And that sort of culminated in January of this year with copper jumping above 430 a pound. Well, first it jumped above 4, then above 430. We've had a pullback, as have many of the metals, um, except for gold, in the last 6 to 7 weeks. But something to note about this chart is while we've had these banking crisis headlines and still prominent concerns about inflation, war, the relationship between US and China, it's a long list, long wall of worry. Copper's holding above $4 a pound, and technical uh, people who use charts will note that this is a bull flag, um, and we're holding above, obviously, this big area of key support, the orange line. So, in my mind, copper is at a critical moment here. Maybe this week, maybe next week, the next couple of weeks, somehow this pattern is going to resolve. And just by looking at this technical setup here, um, with the relative strength index above 50, above the support level, with a bullish technical pattern at a key moment here, I think with the odds favor an upward resolution. And I say that maybe 60-40 probability, maybe 65-35. Everything in markets is probabilities. There's absolutely no certainties. But copper's at a key moment here. And that's why this presentation is potentially quite timely. Moving to lithium. Wow. Lithium has dropped more than 50% since late 2022, whether it's, lithium carbonate or hydroxide. Obviously, the hydroxide price is higher, but both have fallen quite a bit. Um, did a bubble burst. This is a parabolic ascent from 2020 to the peak at the end of 2022, and it's had a crash. I think that's a question that we need to be with. I don't have the answer to it, but certainly the pattern of this chart is very similar to many bubble charts that we've seen throughout history. The Lithium Exchange Traded Fund, which holds companies like Tesla and Albemarle, uh, other battery makers. It's not a pure play, lithium mining vehicle, but it's a good proxy for sentiment on lithium and electric vehicles. More broadly, one can make a case that this is a very well constructed multi-year head and shoulders top. Um, Obviously, we've had a little bit of a rally here to start this week and last week as well after a big sell off. Is it a bear market rally, or is this going to turn into a continuation pattern? Again, I don't have the answer. I don't know the future, but this is something that we want to be aware of and keep an eye on. But, lithium is a key aspect of the energy transition. As you can see, we're going to need 40x more lithium by 2040 than we're producing today globally. So, of all these metals, copper's not even on this list. We need a lot more lithium, 40x more. Um, where are we going to get that from, right? So that's part of the reason why this chart had such a parabolic ascent. Um, I really recommend going to check out Pete Panda. So this is his handle on Twitter. He has an excellent blog post on lithium, the fundamentals of the industry, the sector. Really good understanding of the space, better than mine, quite frankly. And he acknowledges that lithium is abundant on the earth, but projects with size, quality, and permits in good locations with good infrastructure are not abundant, right? They're actually quite rare. And to bring new supply online, we need time and money. Now, the money is coming, it's been coming, but we don't really have time, right? Time you just can't buy. And so that's why companies that have the highest quality projects that are the closest to being operational, for example, Sigma, have had such incredible share price runs in the last year. Patriot Battery Metals, obviously, I'm going to talk a little bit about that in a second, but that's also had a tremendous run. That's a new discovery, high grade with scale in Canada, great location. So while we've had sort of a mad rush into many of these exploration stocks, even the lower quality ones, the ones that don't have a new discovery that's confirmed, I think we're going to see more of a divergence among performance in 2023 among the lithium stocks. The wheat is going to be separated from the chaff. There will still be winners across the space, but there's going to be losers as well in 2023. Supply is coming. You can count on that. For non-experts who want to still speculate in this subsector of the battery metal space, I'd recommend focusing on the best management teams with proven track records. That's the simplest way to do it. Put your money with the best guys that have proven that they've made big discoveries, they've moved mines into production. But it's interesting to note that just in the last couple of days, Liontown, which is a big Australian lithium play with the Kathleen Valley project, which is something like almost 1.5% average grade, over 150 million tons. So that's tier one, over 100 million tons, uh, above 1% average grade. That's a tier one project, and that's the sort of project that Patriot is putting together, and that's why Patriot soared more than 30% during yesterday's trading session. So, absolutely, there will still be big rallies in some of these stocks. But even after yesterday's rally, it's interesting to know that Patriot is still off its all time high, right? That was made in early February. That was sort of a major peak for the lithium stocks. It would be interesting to see if they're able to retake those early February highs. But this is still very much an uptrend. And as I said, Patriot Battery Metals probably the cream of the crop in the exploration space for lithium. Moving on to copper, near term oversupply that's about to wear off. We're facing big deficits over the coming years, and you can see this chart. This is a very common chart, but this is what we actually need, the dotted line, and this is the solid line is what we're probably going to get. When I see probable supply in mining, it's more likely improbable just because of the nature of the sector, the capital constraints, the construction timelines, and the permitting challenges. Um, this is another one showing compound annual growth rate for copper, silver, and nickel. Okay, so those are the big ones in the battery metals. A lot of that has to do with solar, silver, and obviously EVs and battery metals, copper and nickel. So this is an important chart because it's not just EVs, it's not just solar, right? The green energy revolution has a lot to do with power infrastructure and rewiring of the grid. And you can see we're going to need a lot more copper just for rewiring of the grid and new power infrastructure just by the end of the decade. So this is just by 2030. A lot of it coming from Europe and North America. Um, so the primary uses of copper, I mean, copper is used in everything. So I don't need to go through all these points, but copper is used in everything, including high speed rail. 10 tons of copper per kilometer of track for high speed rail. It's used in aviation. I mean, an airplane is all electronics, right? And all those electronics are driven by copper wiring. Obviously, housing, roofing, plumbing, sinks, doorknobs. It has jewelry it's used in jewelry as an alloy with gold and silver. And of course, I can't leave this out. Every EV has nearly 200 pounds of copper in it, the wiring. And this is a daunting task. Over the next 27 years, the world will need to produce 2 times the amount of copper it has produced in total over the last 3,000 years. So 1.4 billion tons. Um, and if you think about it, this amount of copper is basically the equivalent of 30 to 40 new mega copper mines coming online. It's a lot. It's a lot. Mega copper mines. How many new mega copper projects can you even name that are likely to come online over the next decade, right? This is a chart that's going around. Robert Friedland tweeted this, got over 500,000 views already. And basically, the gist of this Financial Times article in this chart is that we're heading towards a train wreck in the copper market just because the stockpiles are being drawn down at such an alarming rate. And that's only likely to accelerate into the end of the year. You can see that this year is looking much worse than recent years. Um, Goldman Sachs, research like in the oils, like oil in the 2000s, you've got to absolutely love copper in the 2020s. Copper is heading for a 15% deficit by the end of this decade. We saw that on a chart a couple of slides ago. So everybody sees this train wreck coming, this big undersupply, this big deficit in the copper market. What are the risks to the copper bull market? I think the number one risk is, well, everybody kind of agrees that there's going to be a big deficit and we need more copper. So in some ways, everybody's bullish. That's usually not good. Recession is a big risk. And that's something that I believe is causing a lot of players in the market to hold off on stockpiling. They just see the global economy, weakening over the coming months and by year end, and they figure they'll get a better price. But maybe that gamble won't prove to be correct, and there'll be a stampede if the recession that everybody sees coming doesn't actually show up. Also, EV growth rates. I mean, obviously, a lot of those charts that I've gone through and a lot of those charts out there are extrapolating high growth rates for electric vehicles. What if the consumer doesn't buy at the rate that the analysts are expecting? And then obviously there could be new copper supply coming online. I think that new mega projects being permitted, I mean, it will happen, but it won't happen in the numbers that the market needs to rebalance. But technological breakthroughs in the recovery of copper from low grade ore is probably the biggest risk. And there's a bunch of companies that are working on breakthrough technologies right now. We'll have to see if those come to pass. And then, there was some news on the Resolution copper project in Arizona last week, basically some positive signs that one might actually get permitted. Now, that's a world-class tier one copper project. pretty high grade, 1.5% copper average grade, uh, very large annual output, over 100,000 tons. But we need 35 to 40 mines of that size over the next couple of decades. Um, that's a tall order. How to invest in copper. So this is sort of the wrap up of the presentation. One option is to take Robert Friedland's advice and just build your new house out of copper bricks, and then 10 years from now you'll be able to tear down the house and buy a fleet of Lamborghinis with your profits. So physical copper stockpiling isn't practical for most investors, to put it mildly. So your other option is to invest in copper producers and copper explorers. Freeport McMoran, obviously big one. Southern Copper, Ivanhoe Mines, which is Friedland's company, very high grade, tier one, deposit that produces copper and nickel. So two battery metals, but it's in the DRC, the Congo, and you have to align yourself with Chinese mining company that owns a big piece of the project as well. So there are some risks there. Western Copper. So this is in the Yukon. This would be considered to be one of those mega copper projects that's sitting out there. They've had some positive news in recent years, including an investment by a super major. Looks like something's happening there, but big capex bill, and obviously the usual questions about permitting in the Yukon offer some questions on that one. And there's a couple others that I would put out there as worth taking a look at in North America. And then the explorers, companies like Pan Global in Spain, Kodiak Copper in BC, and American Eagle in BC, all definitely higher risk, need to prove out more scale, and they're very early in the cycle. So they don't have any PEAs or pre feasibility studies on their projects yet. So definitely much higher risk. Conclusion. So, what's the point of all this? Well, copper is a ubiquitous metal that means progress and economic growth. There's no accident. It's called Dr. Copper by a lot of market pundits. Frankly, at $3 copper or $3.50 copper, I don't see that new supply coming online that the world will need for this green energy transition, right? This pivot that is taking place globally right now. It's just not a high enough, incentive price. So the copper price needs to go back above $5. I don't know when that will happen. It could be this year, it could be next year, but it's got to go back above $5 to motivate that new supply to come into the market. The risk of a recession is the biggest one, quite frankly, facing copper, and that I believe is holding the price back right now. If you look at the chart of the stockpile drawdown that's coming by year end for copper, the price could easily be above $5 a pound over the coming months. But the risk of a big economic downturn is holding it back right now. So we need to really watch what's going to happen over the coming weeks. Obviously, what the Fed does in early May is a big part of that. I think a lot of investors will want to keep an eye on the 10-year note yield in the US. If that starts to move back up, that means that things probably are not as bad as feared, and the economy is better than most are expecting it to be. That should be bullish for copper. If the yield drops back under 3.4% and trends lower, that could be a headwind and mean that actually the economy is decelerating pretty fast. So it's a key moment for copper. Obviously, we could go back to that weekly chart, the bull flag. April is historically a bullish month for copper. So there's some things lining up here that make me kind of optimistic in the near term and the long term. Be optimistic, bet on growth, bet on humanity. Copper and other metals are the fuel for growth and the global transition to green energy. Thanks a lot for your time. Enjoy this presentation and have a great conference.